One of the stocks that we've been tracking at the start is Lupin, and that is on the back of the earnings. We spoke with the management of Lupin, and in fact, we spoke with Ramesh Swaminathan, the executive director of the global and the global chief financial officer of the company, about the factors that led to the higher gross margins in the second quarter. Here's a slice of that conversation.
Insofar as the gross margins are concerned, you would observe that it has been going up continuously for the past 5 to 6 quarters. And that's obviously coming in on the back of, in fact, a lot of effort on the top line front. There's tremendous buoyancy in terms which is being created, obviously, by good products being launched across, especially in America. The last couple of quarters, of course, there has been mirabegron. There was 25 mg in the previous quarter, 50 mg in the current quarter. So obviously the sales mix and the top line buoyancy has contributed tremendously for the improvement in the gross margins front. But that's not the full story because there has been a lot of effort in containing a lot of the cost lines as well. Tremendous focus on alternate vendor development, routes to synthesis, the way we actually freight our goods from India to America in a mode of ocean freighting than air freighting. So all of this has contributed a lot in terms of the gross margins improvement. Going forward, yes, given the rich pipeline that we have for Americas and obviously for other markets, including India, we think this will certainly continue.
Two clarifications. One is on your other operating income. I understand there is a PLI effect which comes into play there, and also an extraordinary item which has come in, provision of 58.5 crores for these litigations which are underway. Is the PLI thing one-off for this quarter, or is it going to come in every quarter from here on? And this litigation cost which has come in, have you broken down across quarters, or is it again a one-off?
Insofar as the PLI is concerned, as you would be aware, you're talking about 1,000 crores being claimed over a period of 5 years and the like. But the government also allows for a spike in a particular year, which could be one-off in that sense. So we would be perhaps claiming a larger quantum this particular year vis-a-vis the other year, so to speak. And that's actually come about. Some parts of it has come about in the first half, so to speak, more particularly in the second quarter. Insofar as your other questions related to?
The provision that you made, 58.5 crores regarding disputes, is it one-off in this quarter, or is it going to be broken down into various quarters?
No, this is essentially a one-time item that you've taken on account of certain disputes, a particular dispute, so to speak, that we've been running with some of our counterparties. It's a one-off item which will not repeat in every quarter, so to speak.
Also, Mr. Ramesh, hi, this is Varsha. Now, your US business grew 6% and dipped quarter on quarter. Now, this was guided by you. Now, what's the outlook there? The single-digit guidance that you've given, is this because of the loss of market share in albuterol?
Firstly, we have done fairly well in America. So essentially, we are middling between $220 to $230 million, and mirabegron continues to perform pretty well, as does the inline products on the respiratory front, both the albuterol and Spiriva. Going forward, perhaps there would be some reduction of some price erosion that you might see with competition creeping in on albuterol. But for the present, for sure, it's doing pretty well, and we are fairly hopeful of actually sustaining our market share on that score.
Can you give us a sense of the generic competition that's now prevailing in the US market, and whether the price erosions have bottomed out in that sense as compared to what it used to be a year back? And also a bit of a commentary on your channel inventory, because that's something which also impacted the US growth, because while the volumes grew, you were impacted by generic competition and channel inventory.
Firstly, the price erosion, I think we have entered a phase where things are fairly benign. That's on the back of the fact that a lot of companies have been pruning down on their portfolio because the fact that there's too much of intensity of competition leading to a high price erosion. And some of these products were actually not yielding us enough. And from that perspective, a lot of companies were shedding our portfolio, and Lupin was no different. So what we really have there is a very profitable tight portfolio. The other factor why there has been a price, benign price erosion is more because the fact that in recent times interest rates were very high, and because of that, a lot of companies have closed down operations, closed down factories, and to kind of deliver themselves. And that obviously has meant some of these products were short of production, so to speak. There's actually been a shortage of products, and that's contributed in some ways to actually keeping the price erosion at a particular level. Hopefully, this will stay the course. Insofar as we are concerned, we are pretty hopeful about, irrespective of the price, we are still hopeful about, in fact, the overall American markets, given our richness of the pipeline. Next year, for example, we do have tolvaptan, and then of course there's a host of other products we're lining up on the respiratory front, on the injectables front, and the like, which will help us to kind of sustain the growth as well as the margin trajectory.
Mr. Ramesh, on the product that you were just speaking about, tolvaptan, now give us an update on the same, given the litigation that you have, and what's your stance there, and how should we think about this product going forward?
It's a fairly large product for us. The litigation has been settled from our perspective in our favor, and from that perspective, we're fairly confident of launching it in the first quarter of next year.
Okay.
First quarter of the next fiscal, that is.
Give me a sense of, Ramesh, the change in regime which is now underway in US, the new president. How do you see pharma companies, and especially Indian generics, performing now in the market? Will you see any change in policy or any implication that's coming in for the Indian pharma industry?
As you would appreciate, our industry is all about affordable medicine, and given the fact that every government would be very keen on ensuring that there is fair supply of medicines for its population, I don't think this industry is going to be impacted very much at all. So, irrespective of whether it's going to be the change in regime, Republican, Mr. Trump, I guess things will be pretty normal for us. From our perspective, there of course would be some emphasis on local manufacture and the like, but I would appreciate that it's going to be the cost of production of for goods manufactured in America is obviously going to be much higher. So from that perspective, we do believe that things will be pretty okay for us. For the generic industry in a general sense from India.
Also, maybe a bit of clarification. If I'm not wrong, at the end of Q2, you're sitting on a net debt position on your books as compared to net cash at the end of Q1. Any particular reason on the high debt that has been taken in the second quarter, and how do you see cash flows for the remaining of the financial year?
Actually, the debt is very marginal. It's obviously because of business as usual in terms of a slight increase in working capital. The number of days has gone up from 102 to 107. The second is essentially payment of dividends. And we would appreciate it also, obviously, we don't believe in actually being a debt-free company because I think it helps in trading on equity. So, a level of debt on the balance sheet is always useful. And we are, given our, strong cash flows, our EBITDA margins, we believe that a debt, could be, we could raise monies if we want to for looking at acquisitions both in India and America. And that's our philosophy, really.
And what is the kind of investments that you see for various new forays? Is there a amount that you are looking at from a capital investment point of view into new forays?
Even if I were to prescribe, say, EBITDA to debt ratio of 2, I would think that close to $1 billion, a little more than that, would easily be possible. So there's tremendous room for acquisitions. And clearly, but the proposition should be compelling in itself. So we would obviously it's going to be calibrated aggression on that score. And if there's a proposition which is alluring enough, we would look at things in both India and America.
Also, I wanted to have update on your pipeline and specifically on this peptide GLP sort of product. So what kind of opportunities you are eyeing there?
The world is looking at it. So we are not, so obviously there is going to be a lot of focus on getting new drugs into the portfolio, especially GLP-1s, given the fact that it's, I guess it's going to be the flavor of the season. Perhaps it's going to be like this for several quarters to come. We are eyeing also several GLP-1, so to speak, not merely for India, not merely for America, but for other parts of the globe as well. I would only say wait for the news on this long term.
Also on the India business, so how are you planning to offset the impact of patent expiry, maybe within in-licensed products?
Well, obviously, some of the lack of sheen in the past has been because of the fact that there has been loss of exclusivity on certain products in India, especially when it comes to, in fact, the diabetes portfolio. There is, in fact, one more product which will possibly go with, we'll encounter loss of exclusivity towards the end of this particular fiscal. But we are also in the process of actually looking at newer products and so on as well. So we do expect the buoyancy to be back and, of course, grow in the quarters to come. We're very, very focused on the Indian market and we will do what it takes to kind of ensure that the growth is a good 25-30% above the market.